I remain bullish on the asset, and I still think that it's not going to be the type of illiquid spikes you saw earlier in Bitcoin's price action, but I do think that it's still a long way off its kind of total addressable market. And I think there's a range of total addressable markets that it could eventually reach. And I think it's still just not anywhere in that ballpark yet. And so I think it has a number of cycles to go through. It's mainstream enough that everybody knows about it, but it's not mainstream enough that everybody understands it.
Lynn Alden is a well-regarded financial analyst and commentator known for her insightful perspectives on economic trends, investment strategies, and market dynamics. In this video, Alden maintains her positive outlook on Bitcoin, envisioning gradual growth towards its extensive market potential. Over the last 5 days, Bitcoin has earned a bullish rating on the Investors Observer Sentiment Score. The sentiment score measures the performance of Bitcoin over the past 5 days by volume and price movement. Bitcoin price is trading near resistance, with support set around $28,477.02 and resistance at $29,495.73, could face selling pressures soon. Alden highlights that both Bitcoin and equity are affected by market liquidity as a correlated factor. Alden is upbeat about Bitcoin's next 3 years, but avoids short-term predictions due to factors like Janet Yellen's bond decisions impacting liquidity and risk assets in the next 6 months. On July 26, 2023, U.S. Treasury Secretary Janet Yellen announced that the U.S. government would be issuing $33 billion in new bonds. This decision was made in order to help fund the government's budget deficit. Some analysts believe that this decision could have a negative impact on the price of Bitcoin. ETF analysts at Bloomberg Intelligence raised their estimates for the launch of a U.S. spot Bitcoin exchange-traded fund to 65% from 50%. Several major institutions, among them BlackRock, Fidelity, WisdomTree, and Valkyrie, have in recent months filed applications for a spot Bitcoin ETF to make investing in Bitcoin more accessible. Alden recognizes that Bitcoin's momentum can be influenced by events such as ETF approvals or delays. We will now bring you clips of Lynn Alden from a recent interview with Scott Melker. Before proceeding further in this video, make sure to click on the subscribe button below to stay updated with our informative content.
When you look at equities and Bitcoin, what they have in common is that they're both heavily tied to liquidity in the market. That's a correlate variable. But then there's other variables that are obviously different for them. So obviously equities care about things like earnings. Bitcoin doesn't have earnings to worry about. Bitcoin has its own unique industry-specific things like ETF approval or not, that can substantially move the price or perceptions of how it would move the price. And so it's got its own, it's kind of marching to its own beat. I am bullish with like a 3-year view. I don't really have a view for the next 6 months because that's going to come down to, there's various human decisions like is Yellen going to issue more coupon bonds, and is that going to suck liquidity out of the banking system, for example, and put some pressure on all risk assets in the next 6 months, possibly. There's so many kind of like individual factors that can influence in that time period. So I don't really try to guess that, but I think most of the on-chain indicators point towards bullishness over the next couple of years. Kind of the amount of that is being held, like the hodling behavior that you
Same.
see, the dollar cost averaging compared to issuance. Most of these things are bullish. Um, Obviously, certain catalysts like an ETF approval, a spot ETF could pull that forward. Delays in those types of things can push it back. I think there'll be more cycles ahead where more and more people will understand it, especially when we look out globally. When you see all these currencies kind of running into issues around the world, and they can say, well, I have a couple options. I have gold, I have stable coins, I have Bitcoin, I have illiquid local real estate, in some cases, whatever their decision might be. And this is like a new option that's available to them that really only in the past few years has made itself known on a broad scale. Well, I think that's the framing to think about, is that basically we have the fiscal side is still pro inflation, pro expansionary, and it's being offset by central bank trying to be restrictive. And I do think that the balance sheet reduction is probably having in some ways a bigger impact than the rates, or at least around the margins. The fact that balance sheet reduction is still going on, and so the question is, if you have significant fiscal expansion combined with that monetary tightness, that's when you risk the crowding out effect, and that's we saw it manifest in the banks. We can see it manifest again in other areas. We could that could be a catalyst for the next stock market correction. Is that if you're still issuing more and more treasuries, those have to be funded, and that has to come out of somewhere. And if it's not coming out of the Fed, Where's it going to come from, right? So that's one variable to kind of I think watch, and I think you can have an environment where it's somewhat stimulative for the economy, those fiscal deficits, but not stimulative for asset prices, because it's not combined with the central bank money printing. Now, should they run into a hard liquidity problem like they did in September 2019 with the repo spike, or the March 2020, or the gilt crisis of 2022? If they have an event like that, or the banking issue early this year, if they run into one of those types of events and they have to reverse their balance sheet reduction and then flip towards monetary expansion at the same time, you still have the structural background fiscal expansion. That's when I think it'd probably be, off to the races, second wave of inflation. But until then, I think we're still in somewhat of a disinflationary period.
During the interview, Lynn Alden noted that international stocks, value stocks, and adjacent spaces like Bitcoin lack the same enthusiasm as equities. Alden underscores the potential vulnerability of equities. Past, equities have shown a tendency to lag behind credit during the lead-up to recessions before experiencing a sell-off. High inflation has historically correlated with lower returns on equities. Value stocks tend to perform better than growth stocks in high inflation periods, and growth stocks tend to perform better during low inflation. Firstly, equities might face challenges if economic data signals a recession. Secondly, a revival of energy inflation could affect markets, influencing bond yields and Federal Reserve strategies. Meanwhile, Alden anticipates risks ahead, raising the possibility of investors turning to Bitcoin, influenced by liquidity dynamics. Alden underscores equities' diverse risks compared to other assets.
The asset class I'm kind of worried about is kind of U.S. equities, because that's where you have a lot of euphoria lately. You don't see a ton of euphoria in international stocks. You don't see a ton of euphoria in value stocks. You don't see a ton of euphoria in Bitcoin and adjacent spaces for some of the reasons we've covered here. Kind of the enthusiasm right now is in equities. One of the concerns I'm watching, because there are two directions that can go bad for equities. One is that if economic data continues to deteriorate and point towards recession, that's generally not good for equities. And then two, if you get a reemergence of some energy inflation, we're seeing signs. Crude oil's been firming up a little bit. Gasoline's been at like year highs. We the past year you had the SPR drawdowns. You had Iran get more of their oil to market. There's been a number of supply and demand changes, and if this starts firming up, then you take away that disinflationary component that's been there for the past year, and if you start putting that into the market, that has implications for long bonds, that has implications for Fed policy, which then can trickle through into equity valuation. um, and we have to see. So the past several months, the Treasury has been really focusing on T-bill issuance. They've been funding themselves at what is ironically the most expensive part of the curve right now, because that's the best for liquidity. That's how they're able to get liquidity out of the reverse repo facility. Some of the estimates are that they might shift more towards coupon issuance later this year, and that could have implications for the shape of the yield curve and for overall liquidity. Like, where is that going to be funded? Because coupons are not going to be funded with reverse repo, and so that's a potentially a different liquidity environment. So I do think that there are significant risks later this year, and I don't know if they're going to say transfer over to Bitcoin or not, or if Bitcoin's going to do more like a kind of trade more like gold, where it doesn't really care about, say, corporate earnings in a way that equities do. It very much tends to be a liquidity play more often than not. Um, so I think that's one of the key things to watch, is that equities have two sides of the area to worry about, where some of the other asset classes, I think are a little bit cleaner.
Looking ahead, it appears that the dynamics between various asset classes will continue to evolve. TechDev suggests that Bitcoin could be on the brink of a significant upward surge, provided a specific indicator continues to align with historical data. If Bitcoin reached $140,000, this would represent a 384% price increase. That's a significant surge that would undoubtedly excite Bitcoin investors. In light of Bitcoin's growing prominence and its potential susceptibility to factors like ETF approvals and market liquidity, how do you envision the future of Bitcoin amidst these shifting dynamics? Share your thoughts in the comment section below. If you find this video informative, don't forget to like this video and subscribe to our channel. Thank you for watching.